Hussbus bus stop.
JP Hussey here, owner of the Hussey Team Mortgage Advisors, with this week's
Hussbus bus stop.
Go Birds! Birds 31-24 over the Chiefs in Super Bowl 59. You heard it here first. Go Birds. Next, let's talk mortgage insurance, okay? Or PMI, MI, right? We can talk about the difference of that, but private mortgage insurance, conventional loans, MI is usually FHA loans, blah, blah, blah. Who cares? It's mortgage insurance. And that is there, all right, in most situations, if you put down less than 20% when you buy a home, all right? And a lot of people get caught up with this. I'm putting that extra $40,000 down to get the 20% so I don't pay that PMI. But they don't know how it works, right? The more you put down, the higher the credit score. That PMI could be like $60. Would you rather pay $60 per month or not pay $60 per month and be out $40,000? In almost all situations, it makes sense to take that mortgage insurance, all right? That's there if you put less than 20% down. So there's a ton of options there. I don't want you to go black and white with, I need to put 20% down, but you might be out 40 grand. Because remember, values increase, you're paying the mortgage down. There's a lot of different ways to do that. So always keep an open mind with mortgage insurance. And mortgage insurance is there to protect the lender because you don't have a bunch of equity in the house in the beginning, right? So if you were to default, they may have to take back a home that's maybe underwater or not as much equity. So that's why that insurance is there. And it's gotten so much cheaper over the years. So always keep an open mind, all right? But what do we do when we did buy a house and the numbers worked out, right? We always talk budget, what's my payment, how much money I need, and it made sense to put 5% down or 10%, 15%. By the way, you can put any percentage down you want, all right? Could be 17, could be 16 and a half, could be a money figure. It doesn't matter. But a lot of times people know those buckets of 3%, 5%, 10%, 15%, whatever it is, all right? And you bought the house and you put that 5% down, let's say, and now you have that PMI, all right? But you always want to fine-tune your finances, right? And you say, JP, we bought the house a few years ago. It was great. We did it. We have that PMI. The value of my house looks to be going up. And guess what? I've been paying my mortgage down, so now there's a bigger gap of equity, right? And you may have that 20%, 25% equity in the home now, right? And you're like, JP, do I even need this PMI anymore? This mortgage insurance, whatever it is, right? And you may not, all right? In the past, all right, you would have to refinance, all right, to get rid of that mortgage insurance, get a new appraisal, whatever it is. But in today's world, the lenders have done things a bit differently, all right, to help their clients out because, hey, you might have a 3% rate from 2021. Rates are 6% now. You don't want to lose your rate just to get rid of the PMI. So how can we remove the mortgage insurance? PMI, MI, I know I keep saying different things. How do we remove that without losing our rate? All right. So here's what you need to do. Some good free information. All right. Because I don't make money off of this, but I want to help you out, of course. All right. So what you want to do is, number one, you got to know that every servicer, right? That's the lender you're paying your mortgage to, right? Sometimes it gets sold, here or that, okay? You need to contact them and tell them you want to look at getting your mortgage insurance removed. Now, I will tell you this. If you have an FHA loan, you will maybe have to refinance to a conventional to get rid of it because FHA in most cases stays, for most cases, a long, long time. But I digress. Call your servicer. Tell them what you want to do. Now, at this point, you're probably going to have to fill out a form for them. This isn't hard, and I think it's worth your time. Fill out a form, okay? In most situations, every servicer is different, all right? And we can give you directions on this. Just contact me. We have a whole template. Fill out a form. Then at that point, most cases, you're going to have to do what's called, and probably pay for this, might cost you $100 or so, a BPO, or a broker price opinion. What that is kind of like a second, third grade appraisal. They're going to look at some comparables. It's not a full appraisal, but they're going to say, hey, there are some other comparables like yours at this value, and then they put it all, mash it up together and see if that mortgage insurance can be gone, okay? So as long as you have that 20% equity or more compared to where your loan balance is, remember equity, stretch it out, then that mortgage insurance could be gone, all right? Now, this might take a little bit of time. Maybe it's, I would say, cost between $100 and $500 because you might get a full appraisal. You're going to have different options. But you want to contact your servicer and say, this is what I'm looking to do. I think I have value. I'm willing to go through the process of getting a BPO or a full appraisal to see if that mortgage insurance could be gone. Now, the only other thing I'll say is, if your mortgage insurance is only like $40 per month, right? May it be worth paying the $500, right? Rates could come down, or if you need a cash out refi, we do it all in one. We get you money, right? We get rid of the PMI, whatever it might be, because cash out refis, you need to have 20% equity in the property anyway, all right? So there's a lot of options, but I want to go over the way to kind of do it on your own if you wanted to, right? And not have to refinance and get rid of that mortgage insurance. If you have questions, let me know. Go Birds.
Hussbus bus stop.